Greetings, everybody. Welcome to Liberty Call. Today is Wednesday, April 19th, 2023. I hope everybody's having a good day out there in the interwebs. Kind of a flat day here in the United States. I mean, most of the day, the Dow and the S&P were, mostly in the red. Sometimes they get in the green a little bit, and then they'd fall back down. So, from my point of view, I think people are just trying to figure out which way is the market headed. Is it headed up or is it headed down? So, and I think a lot of people who were paying attention to the Fed are hoping and praying that the Fed will stop raising interest rates and maybe print some money because, that helps out big business and the big banks and all that sort of stuff. But it doesn't really help out the little guy like you and me. So, all righty. If it's your first time watching Liberty Call, thank you. I'm glad you're here. Give me some thumbs up, likes, shares, subscribes. I greatly appreciate it. And let's go ahead and jump into the numbers and see how they turned out for today. The Dow Jones was down 0.23, 79 points, and closed at 33,897. The S&P 500 was flat, up 0.04 points, closed at 4154. NASDAQ was up 0.03%, closed at 12,157. The VIX was down 2.79% today. It's currently at 1636. Canada was also flat, down 0.02. Brazil was down 2.13%, and Mexico was down about 0.1%. Over in Europe, Germany was flat also, up 0.08. UK down 0.13. France up 0.21. Netherlands down 0.38. Spain up 0.77. Italy up 0.15. Switzerland up 0.06. And Portugal up 0.38. Russian exchanges both red today. MOEX was down 0.35. The RTSI was down 0.62. And the overnights in Asia, a lot of red. Starting out with the Nikkei in Japan, it was down 0.18. Australia up 0.07. New Zealand up 0.37. And mostly reds across China. Shanghai was down 0.68. The Shenzhen Component down 0.84. China A50 down 0.74. DJ Shanghai down 0.67. Hang Seng down 1.37. And the Taiwan weighted down 0.62%. So, like I said, kind of a Goldilocks, kind of a medium porridge day. Not too hot, not too cold, just kind of floating around in the middle. All right. Well, let's go ahead and jump on over to today's market recap. S&P 500 pairs losses, but Netflix slump curbs upside momentum. All right, my notes. On Wednesday, the S&P 500 paired losses, but gains remained in check as mixed quarterly results, including from streaming giant Netflix, weighed on investor sentiment. Netflix shares fell more than 3% after the company reported mixed first quarter results and guidance that fell short of expectations. Netflix delayed its plans to broaden its crackdown on password sharing to the second quarter from late Q1, which is expected to drive short-term churn before driving 2H revenue acceleration in subscribers and monetization, according to Oppenheimer. Tech was also weighed down by a stumble in semiconductor stocks as ASML Holdings slipped 3% after reporting a 46% drop in Q1 net bookings as customer demand remains weak. Intel Corporation also weighed on semis, falling more than 1% after announcing it would end production of its Bitcoin mining chips. Financials continue to roll out quarterly results with regional banks and Morgan Stanley in focus. Morgan Stanley reported Q1 earnings that topped Wall Street estimates, but was overshadowed by weakness in deal-making activity, which led to a 19% fall in profit. The sentiment on the regional banking sector, which has been the most stressed following the collapse of SVB and Signature Bank, was boosted by a 23% surge in Western Alliance after the bank said its deposits have been rebounding since April. Citizens Financial Group paired losses despite reporting quarterly results that missed on both the top and bottom lines, as deposits slipped nearly 5% following the recent turmoil in the banking sector. United Airlines Holdings climbed more than 6% as its forecast for it to swing to profit in Q2 overshadowed mixed results as revenue fell short of analyst estimates. Energy stocks, meanwhile, dragged the broader market lower as oil prices fell despite data showing U.S. weekly inventories fell much more than expected last week. Valero Energy, Marathon Petroleum, and Phillips 66 were among the biggest decliners in energy. The mixed quarterly results indicate that the earnings season continues to heat up and the performance of companies in different sectors has not been uniform. All right, so that was everything on the market side of things, let's dive a little deeper. Dollar gains as on rising U.S. yields. British inflation lifts pound. See what's going on in currencies right now. All right, the U.S. dollar strengthened on Wednesday as Treasury yields rose, but the pound gained against the greenback after UK inflation stayed above 10% in March, increasing pressure on the Bank of England to continue raising rates. The dollar index, which tracks the currency against a basket of peers, rose by 0.206% as analysts become less confident that the Federal Reserve will cut rates later this year. Two-year Treasury yields rose by 7 basis points to 4.269% after hitting a 1-month high of 4.286%. However, the dollar rise is only temporary, according to Bipin Rai, North American head of FX strategy at CIBC Capital Markets, who said the currency would, quote, come under considerable amounts of pressure, end quote, in the long term. Meanwhile, Joe Manimbo, senior market analyst at Convera in Washington, said the immediate outlook for the dollar was less than bullish, and that's in quotes, as central banks abroad have more hiking to do over the balance of the year than the Fed. Sterling last traded at $1.244, up 0.13%, while the dollar rose 0.46 against rate-sensitive yen at 134.71, having briefly surpassed 135 for the first time in a month. Deutsche Bank has revised its prediction for UK interest rates to include 2 more 25 basis point rate hikes from the Bank of England, while Morgan Stanley predicts 1, with a risk of a second. All right, so that's what's going on in the currency world. Not a lot of economic data out today, so let's go ahead and go to one last article, which is a little troubling. It's titled, quote, the dollar is in real trouble, end quote. Charles Nenner warns 30% of global population will die in the next war cycle. Well, boy, that's pretty gloomy. All right, let's see what Mr. Nenner has to say. All right, renowned geopolitical and financial cycle expert Charles Nenner has issued a warning that the U.S. dollar cycle is headed for trouble and could fall 70% on the dollar index. Nenner had previously predicted the decline of the U.S. dollar and says there's no reason to be in the dollar anymore, especially as all countries will form an anti-dollar alliance, including Saudi Arabia. Nenner also predicted a huge loss of life due to war, with 30% of the people on Earth dying in the next war cycle. He says that the United States is at the end of its empire, going backwards and not number one anymore. The same issues that finished other countries, like bad education, too many outstanding loans, and people becoming too lazy to do hard work, will lead to the end of the civilization. Well, I mean, all you got to do is go onto TikTok and see all the blue-haired weirdos that are trying to chop off their body parts. I mean, country's going to hell. Alrighty, where was I? Nenner also predicts a coming Great Depression-style crash in the near future, and that big banks are contacting him to consult on buying physical gold because, quote, they want to survive what's coming, end quote. He says that if China and Russia start dumping their U.S. bonds, there could be a serious problem. Nenner also warns of a possibility of war in Taiwan, South Korea, and the Middle East with Iran, which could all act at the same time while the United States is weak and busy. Nenner is not only concerned about the U.S. dollar cycle and war, but also predicts that both the commercial and residential real estate markets are on their way down for a long time. Furthermore, he says that the economy is really going to suffer, and if the dollar goes really low, there could be a small bounce in the economy, but it is just a fooling bounce for people. Longer term, it is just finished. Nenner also gives a sign to look for when the economy is going into recession that has a 100% track record. Nenner's warnings about the decline of the dollar and the possibility of war, combined with his predictions of a coming Great Depression-style crash and the decline of the real estate market, are certainly alarming. It remains to be seen how accurate his predictions will be, but it's clear that Nenner believes that the future is bleak and that individuals and institutions should be taking steps to protect themselves. End scene. Yeah, I mean, I don't think I'm as gloomy as he is. I would just like to see the federal government fall apart. And then we round up all the jerks who've been stealing from us all these years and throw them into a volcano, or maybe just send them to like a prison camp in like northern Alaska. I think that'd be really good. You know, all the politicians, all the jerks that work at the Pentagon, you know, I was counting up the numbers recently. I think there's 10 million or more people who are on the federal payroll I mean, that's just ridiculous. Anyways, all right. Well, that's everything I had for today. If you want to get your ducks in a row for the upcoming global catastrophe, hey, give me a buzz. Go to dsafinancialgroup.com. All my contact information is there. If you want to write a plan for the upcoming apocalypse or just get your ducks in a row for the short term, hey, I'm your guy. All right. Well, hope everyone has a wonderful evening, and I'll talk to you guys next time. Adios.